Good evening, traders. Welcome to the Sunday Open. I'm your host, Craig Shapiro, macro strategist at NinjaTrader Live. Have a great panel for y'all this evening, and we are sitting here waiting for the tape to open. Before we do that, let me just introduce the panel real quick. I got Pax checking in from Chicago. We have Pharm checking in from Arizona, and Sara is in Southwest Florida still, right, Sara? Not St. Louis yet, but how's everybody doing this evening?
Oh, great, Craig. Sara, Pharm, how you doing?
Fantastic. It's sunny and warm here.
Here too.
Doing well. Ready for this week, for sure.
Nice. Well, futures just open. It's quiet, right? Look at this. I mean, basically, minis are up a point. NASDAQ is bouncing around plus or minus a point, now up 11. But I saw it negative there for a second, rustled down about a tick.
It's not
Bonds
quiet. This
yeah.
is actually kind of a violent open. This is
Yeah.
this is a bearish open. The high is the opening print. No, it's not. It's just off. But the opening print in the S&P was 64.75. The high is 66.75, and they sold off. NASDAQ is 25,144. No, 25,142, and they sold off immediately. That's a bearish open. Until we take out those opening prints and those highs, I'm looking to sell this. And I never trade Sunday night.
Yeah, I'd say that the rhetoric over the weekend was, mixed. Bitcoin was weak kind of all weekend. I was listening to a bunch of different podcasts, people getting incrementally more concerned about liquidity in that market. And, broadly speaking, the narrative on the NASDAQ story, on the AI CapEx story, I think is, making the rounds a little bit more now. We got a big week coming up with respect to Nvidia reporting on Wednesday after the close. We have the Fed minutes on Wednesday at 2 p.m. And then finally, now that the government is open, we get the resumption of data. So we are going to get the September payroll print on Thursday morning at 8:30. If you remember back into September, print was ready to go, and then they shut the government down. The odds are that's not going to be a particularly attractive print. Labor market momentum has been pretty soft. We were seeing that last week with the ADP data. We will get an ADP weekly reading on Tuesday morning as well. So the story about the labor market continuing to be soft is out there. We have this AI CapEx narrative starting to struggle a little bit as well. That's making the rounds. Some concerns about crypto making the rounds. So I think we saw that on the tail end of last week and into Friday morning, and then similar to the prior week, we had a nice bounce off of some technical support. I'm sure you guys will talk about that too on Friday afternoon. But to your point, Pax looks a little bit weak here to start the week. So what are you thinking here? How are you planning for the week? What are the keys for your setups and how you're thinking about things?
Well, just now, what I'm looking for are little things like this. And Sara and I are always looking for these little pivotal prices. And when we open, when I have a day like let's say last Wednesday, when the opening range was in the S&P was I have to look it was 69. No, it wasn't. It was 68. I can't remember what handle it was. It was 84, and the high of the day was made in the opening range. The opening print and the high of the day was made in the opening range. We broke for 2 days. And then on Friday, we tried to break, Friday out of the opening range. We didn't. I covered my shorts as we came up. I did it on the stream, and we came up out of the opening range, and I covered my shorts. I never got long. I just had a hard time buying them. Plus, it was Friday and Capital Preservation Friday, so I took it easy. But when we open here on the reopen, when the S&P opening print is 64.75, and that's 10 higher or 11 higher, and they immediately sell off, and that is the opening. There is no opening range outside of RTH, but the opening print and the high are basically the same. That's a bearish sign. Until we take it out, again, I'll be looking to sell this. The bonds are weak, so the 30-year bond is open underneath 116 quarter again. So there was the bonds had rallied a point, broke a point, rallied a point, broke a point, and now they're opening soft again. So I don't know. You got Bitcoin being liquidated. You got gold selling off down $15, $18 at this point. the world is uncertain. You know, there's the world, the market does not like uncertainty, and we have a lot of big earnings out this week. So, you know, and I'm looking to sell this until we, and I'm looking to sell the indices until we take out the opening print and the high.
Yeah, makes sense. I mean, I see oil down, metals across the board down. Yeah, that risk off flavor, which I think we had in place at the end of the week, which maybe got a little bit of a reprieve into the close on Friday. Seems like we're back at it again. And I think the narrative is one where folks who had been comfortable with the Nasdaq story, with the AI capex story, for months, if not longer, I've started to ask questions. Right, we've seen the story go from internally generated free cash flow to fund capex growth to now the sector needs increasingly debt finance growth in order to hit their hit targets. We know that there's constraints on the power side, on the infrastructure side, that may make it difficult to actually spend all that money. If you look at something like Oracle gapped up in the middle of September. I think it was probably one of the biggest market cap gains, ever for large companies, up 30% that day. $300 billion of market cap gained. It's completely filled the gap now, trading weaker than it was kind of in the middle of September. Similar for Meta, another name which is struggling with that free cash flow generation story. So some of the Nasdaq stalwarts are struggling here, and I think the market's going to have a tough time finding where else to go, where to pivot to. I mean, last week, healthcare, biotech caught a nice bid. I think we're definitely seeing some rotation there. There was some defensive rotation. Energy was a little bit better, but are those sectors really going to be robust and strong enough to keep the entirety of the tape moving higher? I'm really not that sure. I'm not that confident in that at this point. So we're seeing Nasdaq here down 45 handles. S&P's down 11, Russell down 30 basis points. Suspect open to start the week here for sure.
Going to be now. I mean, this is interesting. I really didn't know what to expect from the open, and when they opened it, when they popped us higher just a little bit, and the opening calls were a little bit higher as I was tweeting. I'm a little bit surprised that we're selling off, as quickly as we did. Not a whole lot of volume, but the Nasdaq had no bids and offers on the DOM, and when you see something like that, you've got to be on the lookout for velocity logic in the indices. Then the S&P wasn't quite like that, but the Nasdaq broke 100 points off that open. I mean, that's kind of a bearish. I mean, not bearish. It's kind of a concerning open. So it's going to be, I'm looking forward to this week. I had a great week last week, and I'm looking forward to see what we do this week too.
And certainly a change of character, right? Mondays have been up days. I think basically, several weeks in a row or 80% of the times, at least since the Liberation Day, Mondays have been kind of, way stronger. So, to see some of that concern enter here, maybe a little bit of a change of character. Pharm, what are you thinking here as we kickstart the third week of November, I guess it is?
I mean, first things first, and first moves for this week. And then I kind of want to zoom out a bit and, I'll talk about some of the things that I've seen. To me, I mean, this first move is all about, we had multiple sets of single prints, which if you don't know what those are, don't worry about it. But basically, prices that trade only through 1 30-minute period of the day, prices aggressively moving higher off that open, right? We had that initial drive lower for like 5 minutes, and then they just covered them, right? So, I mean, recognize it for what it is. There was definitely a whole lot of covering going on, but that doesn't mean that it has to unwind. To me, it's these two sets of single prints right here on ES, and NQ has the same characteristic. Basically, it was 38 to 47 on ES for the first set, and the second set, I want to say, was like, I don't know, 19, 20, something like, or no, 26 to 30, something like that. Basically, if these don't hold, they start giving them back and just trending through this, then it's going to be a really, really bad look. This is just a Sunday night, right? We haven't even opened yet. But I agree with Pax. This is a very bad looking open. Sometimes you'll get these little trap jobs into a structure repair mission,
right?
And then it just bids straight up through the open. Like, okay, fine, right? But I mean, that to me is kind of what needs to happen. This needs to hold here and at least pause for a few hours, find some consolidation, and we'll see if they can bid that open, like Pax was saying. And to me, that's the spot, right? Like, if we can hold these spots here and then bid through Friday's high, then it's going to look pretty good, right? And then we can talk about, where we go from there. If I zoom out just a little bit, if you get through Friday's high, I don't see it as being any kind of an all clear. There's all kinds of market generated information here in between. We had that prior multi-week consolidation. The high is basically kind of right in that range. I think bulls feel a little bit more comfortable way up here, back above what was Wednesday's low, Thursday's high. Pax talked about that high where we just, the opening range was high a day on NQ and ES. That was Thursday, and they just puked them, right? So, reclaiming all of that is going to look fantastic. And so I think this is sort of your battleground in between Friday's high and, again, call it Wednesday's low. But first order of business, again, right here where it's at, we're going to find out. Right now, it is, again, Sunday night, so we'll see what cash has. You just don't want to give these back because then it's just going to undo all of Friday's move, and we're all going to see that it looked like short covering if that happens. If new initiative buyers step in and defend these areas and they can live through the opening print for this session and ultimately Friday's high, then we're all going to think it looks pretty good. I think, but big picture for me, I'll ramble for a few minutes. It's an hour show. We've got time. If you go back, everybody remembers October 10th, right? That big liquidation day that we had here. Coming into that, I called it a trapdoor setup. And what that basically is, as you're trending higher, what any trend looks like is, you have periods of consolidation, multiple days, multiple weeks maybe, and then you would want to see an aggressive move higher and a trending phase. And then it's going to pause and it's going to balance maybe for a few days, maybe for a few weeks, what have you, aggressive trending phase. And that's what trend looks like. Well, as trend matures and gets a little bit more tired, I guess I would say, sometimes those periods of consolidation tend to overlap just a little bit more, or at least there's like less space in between them. It's just a sign of fatigue. And we saw that fatigue manifest with that October 10th liquidation break. And from there, the following week, it was kind of back and forth, right? It was ugly. If you look at the volume profile, value did gap lower relative to the preceding week. But look where we started from, right? We closed, 2% below that week's value area low. Okay. So bulls ultimately reclaimed it. They made it, they got it done. They drove it through. We got new highs, right? Well, not last week, but the week before was the first week that we've seen actual top-down distribution, controlled volume build, driving through bid, taking price lower. That was the first time to me that we had seen that quite literally since the low of this year, since coming off that low. And that to me is a notable change of character. It doesn't mean the top is in, but it means something has changed in the tape. Sellers are a little bit more interested, perhaps a lot more interested than they have been. We saw them, reoffer or reaccumulate, redistribute, and sell this thing a couple more times. We saw it again last week. It's definitely is a very, very different tape, and it's worth paying attention to here. Again, like these things take time. This might be a short-term change in opinion, but sellers have shown themselves now for the first time off the low. It is a different tape. It is much more two-way. I expect that to continue. It doesn't mean that we don't rip their faces off and head back to new highs, but it's something to me that I'm monitoring, and now monitoring what monthly profiles do, higher time frames, what is accomplished, what is not accomplished. But this, if you look at these lows, and actually I'm going to go to NQ real quick, and I'll give somebody else a turn to jabber. This spot on NQ, you just look at how price is fired out of here every single time. Call it 24.6, 24.5. Every time it gets down there, it's like sellers, look at that buyer in the 24.6, and they walk right past him into the stall because they don't want to stand next to that dude at the urinal. That's for sure. They just cover and they just let it go. And it's the same thing that happened here. And so we'll see, if sellers prove a willingness to actually initiate value a little bit lower. This week, they've got this range to work with under Friday's high, right? Again, that's why it's the importance of capping roughly Friday's high or any quick push above there. And they're going to have to find a way to build value down here lower. Otherwise, we're going to have a swing low. They're going to cover and they'll have a chance to resell the highs. So I very much am interested to see how this week goes. I could be very, very bullish out of this spot. And I could be very, very bearish out of this spot. And it really depends to me on how these single prints from Friday respond. So this is a big night. It's a big day tomorrow.
No, it makes sense. Interesting that that level you're pointing out, that 24.6 spot for NQ. Just we were talking before the show, but there's this very large covered call ETF QYLD that has about $9 billion of AUM. What they do is they're selling calls on a monthly basis. They expire on expiry. 24.6 is the cash price of their option, which will expire. Basically, what they'll do is they'll close that position this Thursday, and then they'll reissue a new position, a new range for Friday. And so typically at the close or the last couple hours of trading on what'll be this Thursday, you'll see them buying back that hedge and then reinitiating that hedge on Friday morning between 11 and 1. And so I guess given the size there, given the gamma level, and given as we kind of getting closer to expiry, seeing some violent reaction off of that level on Friday, last Friday morning, or a couple other times, I think makes a lot of sense. It's a pretty big, important position, sitting out there with those calls. So they also have an S&P one, and the level for S&P is at 66.20 cash. So we haven't gotten down there yet, but we'll see. Sara, how are you positioning, thinking about the setup for this very important option expiry week, Nvidia week, resumption of data week, a big week all around?
Well, let's see here. I'm a little, my conviction isn't too high because all four of the futures kind of have a different setup, which is not ideal. So what I can tell you is that last week, YM or the Dow was the strongest as it hit a new all-time high. Then I can tell you that RTY was the weakest because it broke last month's lows. And then we have a little bit of a divergence or discrepancy with ES and NQ. NQ did take out previous week's lows. ES did not. ES stayed an inside week. So it's a little kind of all over the place. Um, let's see. I personally, I know PAX too would probably prefer downside, uh,
Mhm.
which I would like to get, but I would not like to get it till Tuesday, probably. Um, because we kind of, the way that we closed on Friday, we kind of set us up for a bullish Monday if we can take out Friday's highs. So that's something that we'll be watching for in the morning. Um, it's just I mean right now we're in the middle of last week's range on everything. And like I said, everything has a different setup, so I'm not too convinced one way or another. And we when it's like this, we kind of play it day by day. Like we could be bullish one day and bearish the next, kind of like what happened last week. Um, so we will play it by ear. I do want to talk about gold and silver and all the other things I talk about every week for sure. Uh, Silver was definitely stronger last week, but we did call for a new all-time high and we did hit it from that inside week and up. If you guys remember, we were talking about how we stopped out anybody who had been long since 10.2. We stopped them out on 10.28 and then we ran to new highs. And then this pullback on Friday made complete sense because once you hit your all-time high, that's where people take profit. This is profit taking and then more profit taking. So now kind of opening in the middle of last week's range, we're going to have to see where it wants to go. The question we always ask is how are we going to get out of that? Because gold, like, or silver did its job in a big way last week. From the trigger to the target, it was up 10.3%, which that's a lot for silver. Gold was had the same setup but was weaker. It did not hit the all-time high. It did hit a couple targets. It hit a weekly target. So kind of same thing. Gold is weaker and opening inside last week's range. So until we can get out of that range, you could just expect chop. What else? Bitcoin is still puking. We did take out this. Ooh, we took out some more levels, I see. So, Bitcoin's pretty bearish on all the time frames, except yep, even the yearly. So we've flipped the year red, we flipped the month or the quarter red, like way back here at what was the open? 115. We've gone outside quarter. So the target, like for end of year for Bitcoin, is honestly like down here, which is about 74,000.
I'll buy him there.
Yeah. So yeah, so they're kind of doing a broadening formation expansion right now. And we say that because broadening formations don't do this forever. That would be too easy. They usually break and pick a side. If you are going to get a little corrective activity, it would probably be around this level just because there's nothing for a while down. Wow, 74 looks a lot closer on this chart. Anyway. And then oil. I talked about this last week. We are 1, 2, 3, now 4 weeks inside that weekly candle. So still tightening up. And the dollar, we did have a bearish week last week, which we expected, but it did not really go anywhere. So now it looks like it's probably closer to going hammer week and back up here to new highs. But you have to break above last week's highs in order to do that. You can't go up unless you go up, you know? And I think that that's all I wanted to cover. Yeah, so
Huh.
just inside on, you know, pretty much everything. So we'll just play the daily time frames and 60-minute time frames and, you know, do what we can. Like I said, we are set up for a more bullish day for Monday, or like Pac said, once we get above the opening range, we have all these hammers. And if that happens, we could have a simultaneous break, meaning at least 3 out of the 4 futures are going to be moving up. So you would want to be long if you're above. I would want to be long if I was above Friday's high. Not financial advice.
Well, it looks like since we've been talking, the futures have relaxed a bit. We've rallied back some, with S&P's now up 7 and Nasdaq up 48. Russell up a touch. Bonds are still a little bit softer. Oil down 1%. Gold's recovered some, up a little bit here. So, look, I think like we were talking earlier, there is some shifting narratives in the tape. It's a big week for data, for earnings, the Fed minutes, and in DC too, right? We're going to get some, not necessarily market moving stuff, but it could be with respect to how the House comes back and votes on these Epstein files and just what Trump may or may not do with respect to that, and will he think about other things to try to help address declining popularity, approval ratings, and what does that mean? There was talk on and action actually late last week about removing some of the tariffs on some food items. Clearly, the administration is sensitive or becoming more sensitive to the affordability issues. They recognize that was a problem in the most recent elections from a couple of weeks ago, and will be trying to be out in front of that and trying to address affordability concerns. May revolve around, may involve some, future money printing for next year with these dividend checks or, other types of things to help address consumer strain. So you have to assume that if the Epstein stuff moves further, Trump may get more active on trying to deflect against that. We were kind of half joking before the show that might we get a wag the dog situation here with increased rhetoric around attacks in Venezuela. We'll have to watch the oil market and crude and gold with respect to that. So a lot going on this week, and I don't know. I think we'll see some of this two-way tape that Pharm you kind of described earlier. Just some of that overhead supply from a couple weeks ago, right? If you remember, that last week of October was a crucial week. We had all the Mag 7 really accept Nvidia reporting. We had the Fed meeting. We had the China trade deal resolution. Kind of felt like a reasonable crescendo of positive news, into that. That was followed by the government reopening, some of the tariff stuff, and the Supreme Court ruling, which we're waiting for. Could come as early as really tomorrow, but most likely will come maybe after Thanksgiving and the first week of December. We might get some, potentially negative ruling on tariffs, which will have implications for the bond market, particularly at the long end if we start to lose some of that tariff revenue. So a lot of potential headlines coming out in the course of the next, few weeks here as we make the turn into the end of the year. So, plenty going on. What's Pax? I'm curious.
Side note.
Yeah, go ahead,
Oh.
Sarah.
Oh, I was just gonna say, side note, if you guys didn't know, you can connect NinjaTrader straight to TradingView for your real account or your paper account. It's badass. Just saying.
Can you, so if you've got TradingView, Sarah, can somebody, if you've got TradingView, can somebody use, can somebody download, can somebody use I don't know how in the hell to phrase this. If somebody's using TradingView, can they download Ninja indicators?
I don't know.
I'll ask Burke.
I don't use indicators.
Well, my indicator, because
No, I don't know.
somebody had developed one for NinjaTrader, and I'd rather use them, one that I know is good. Okay, so Craig, what were you saying?
No, I was gonna just transition back to you. How would you think about this the potential for headlines, right? We have, look at Nvidia's 7-8% of the S&P. We're in expiry week, VIX expiry Wednesday morning, options expiry on Friday morning, and then again Friday to close for single stocks. Resumption of data Thursday morning, Fed minutes Wednesday morning, right? Very back end loaded, and like I said, Nvidia too. Just thinking about these are big potential catalysts for the tape. Do you think about this is like 2 halves of a week? We got the trading into those events and then trading after that. How do you approach options expiry week?
I don't. I don't trade options. So shit, I just bought 46s in the NASDAQ and got stopped out. I don't trade options. So I've never really learned how to trade options, Craig. So I don't. I don't really.
I meant more that it is an expiry week. Does it change the dynamics of how you think about volumes and futures for the tail end of the week at all?
No. So I'm gonna whatever our opening ranges are, I'm going to trade the breakouts from it. Somebody had mentioned in the chat earlier, what about the pivot? Do you guys trade pivots or the pivot? And my question back to him was, whose pivot? The only pivot that matters to me in any trading market, at least futures, is the RTH opening range every day. And that's going to be the pivot. That's been the pivot since 1860. And it's been the pivot again since, widely used since whenever Dow theory was invented, 1910, 20. And certainly those pivots are still used every day by HFTs and algos that create the volume and price action. So I'm going to be long above that, and I'm going to be short below it, and I'm going to use the same algorithmic tone that the algos use, which are going to be these my 15 handle rotations in the NASDAQ and 65 handle rotations in the S&P, and those become swing positions. So for example, like Wednesday, the bottom of the opening range on Wednesday last week was 68.87. And the high of the day that day was made in the opening range, NASDAQ and S&P, and we came out pretty quickly and easily. We didn't really break that much, but we never make it back to our entry prices, so I stay short something. And then by the time Thursday we fall apart, and we had to work for them on Thursday, but we had a bearish open. We had to bang back and forth a little bit. But finally, the market gave us real clarity as to, this is from a trading standpoint, not a macro standpoint, and in some downside. So I'm not aware of what, I'm not paying much attention to what the what options expiry is doing or what anything else is happening. I'm just paying attention to on Thursday. I'm paying attention to the opening range of 68.47. I'm paying attention to the 15 handle rotation at 30. I'm going to take profit there, and I'm going to sell more underneath it. I'm going to take them to 15. By the time we made it down 1, 2, 3, 4, 5, 6 15-point ladder rungs, I had a pretty sizable position on that I covered Friday coming out of the opening range. So simple and actionable, consistent, repeatable, and scalable. I'm not managing money for anybody. I'm trading my own account. Somebody asked how I define opening range. first 15 minutes or 1 hour. There is no definition of a 15-minute opening range, nor is there one of a hourly opening range. The opening range has been clearly defined by CME Group, by CBOT, by NYMEX and COMEX since futures were invented as the high and the low of the first 30 seconds. It is still defined that way, and I still use that, as do every algorithm and every HFT that trades. So, why would I want to change it? This is not market profile, nor is it volume profile related. This is just pure price action. So, Thursday or Friday, when we came out of the opening range and we start to roll, in the opening, top of the opening range was 97 quarter, 66, 97 quarter. We start coming out of the opening range to the upside, cover shorts, because now we've got a rally going. We had 1, 2, 3, 4, 5, 6, almost 7 rotations higher. So 5 rotations lower Thursday, 6 rotations higher Friday. And you know what the high? It wasn't the high. We took it out by 10 points, but came back under it. The 50% fib on the entire week. The high of the week last week in the S&P was 69 even, and the low was 66.75 or something. The halfway fib of that 74. The halfway point of that entire move, the entire week, was 67.85, and we traded right to it. Got above it, tried to push above it, came back under it, and failed. If I'm going to sell a rally, that's a rally I'm going to sell. So this, what looked to be a bearish open, as I pointed out earlier tonight, when we opened 30 minutes ago, is no longer so bearish because you got the NASDAQ taking those prices out and sitting at it. And trying to press above that, the 25,144 from 146 area, and the S&P is just at it. So if you're a rally seller, you can take I took a stab at buying 46s and scratched them out for, no loss. But if you're a rally seller, this is where you want to get short. You want to get short in the S&P at 67, 63, 64 with a tight stop. You want to get short in the NASDAQ at 25,144, 146 with a tight stop. Don't let them get above this. Don't let them get above the weekly reopen, and don't average in your shorts. If we get above it, you got to flip and get long. You've got what I'd referred to as perfect trade definition. You're getting short at your stop, and your stop is not only to get you out, but to get you on the other side of the market. See what I mean? So I'm just looking for actionable trades that way without having to overthink things. Oh God, I just sold a 2-lot on accident. I went to go center my screen, so I bought a 2-lot or sold a 2-lot. I want to, when I try to overanalyze things, and remember, Craig, I'm talking about this from a pure trading standpoint. When I overanalyze things, overthink things, I get myself in trouble. I have a plan, I have a process, and I only trade my process. I don't trade what I see. I'm not going to trade my guesses. I'm not going to draw lines on a chart or trade somebody else's pivot points or support and resistance. Margie Teller, who is the biggest independent trader in the history of traders, 5'3", short little woman, was more than 10% of the Eurodollar open interest, more than 10% of the Eurodollar daily volume. And Margie said to me and a bunch of other traders sitting around having a drink one day, you guys are all looking at the same moving averages. You're all looking at the same support and resistance. What makes you different than you? What makes you different than you? What makes you different than you? That stuck with me. I'm the only one still trading, and I'm the only successful trader in that group, and those guys were all big shots. I just had this conversation with an old legendary trader yesterday at a high school state football game. But the point is that I need to have a plan that's consistent, repeatable, and scalable, and a process that does the same. And I trade only that, because then I protect myself 1,000 times out of 1,000. I never leave my flank open. I might not catch every wiggle. I might not catch every trade, and CNBC should have fucking going to put me on, or CNBC is not going to put me on to make me sound, I don't sound smart. I sound like a trader. I sound like a street guy, because that's what I am. And that's how I trade. But I'm going to go, I'm going to continue to take care of my family. I'm going to continue to laugh all the way to the bank, because I don't care. I'm not paid to react. I'm not paid to think. I'm not an analyst. I'm not paid to think. I'm paid to react. I'm paid to react to what the market is doing in real time, protect myself 1,000 times out of 1,000, look for places to size up to my positions, let for little 15-handle wiggles turn into 200-point swing positions. Let's see what the market is going to give us this week. Protect your flank on every trade. know where you're wrong before you take the trade, know where you're right, know where you're going to add, and know how you're going to let something run if the market gives us that. We have, my gosh, we have a wag the dog situation we can talk about, and possibly anyway, that can happen with all of the stuff that Trump is doing and facing. We've got so many things going on all across the world, all across the country. We are at a precipice in so many ways. There are so many things that can happen in these markets. Trade them, react to them, unless you're an analyst.
Yeah, look, I don't know. I mean, preaching to the choir there. I think you got to, trade your strengths, right? You know what you're all about. You know what works for you, and kick out anything that is a distraction, from that process. But it makes a lot of sense. Pharm, curious your thoughts here. I know some folks are looking at gold.
Yeah.
Wanted to see your thoughts there on gold. And I don't know. I mean, like the fundamental story, we've been talking about it, every morning and, throughout the day about fiat debasement, money printing and the like. But, from a technical perspective, we had what looked like a blow off top a few weeks ago. We've been digesting sideways, just trying to build some value. What are your thoughts here?
Yeah, I'll pull up gold, but brace yourselves. I haven't updated the chart in a while, so it's pretty ugly looking. But just real quick with ES, obviously reacting very, very nicely at the single print so far. And I agree with Pax completely. If it can find bids above, its opening range on the 30-second, the real opening range, the open, then it's gonna look pretty good. NQ is above it, and ES is trying to rip through it right now. So gold reacted at the open at an incredibly important spot based on last week's profile. This is like low of week potential, this spot, like it kind of needs to be, I would say. If you look just a little bit left, I mean, first of all, if you look where it's at, sort of at the lower edge of value for last week, leaving this tiny little distribution trapped, and certainly this excess volume down here trapped. Sitting below there is the volume from 2 weeks. So that is a very, very important low that it's coming into now. I don't want to say that it's all clear above, this next spot I've got up here where it's sort of stalling. You can call it 4110, give or take. But if it can clear and base above that range, I think it's a pretty good look to potentially come back up to 4150s. Now this little LVN here, I haven't looked at this yet this weekend. This actually could be reactive due to the presence of these single prints here. It was an overnight set of single prints, but this LVN here right in these singles, call it 4130 down to 20-ish, could be reactive and potentially problematic. But I think if gold can fire through this range, fill in these singles, maybe tag last week's volume point of control up here in 4136, and then base above this area where it's stalling now, it's gonna have a pretty good look to it, I think. So I've been intermediate time frame constructive on gold. Was looking for a nice pullback. We got that. Kind of dropped off my radar just because I've been busy watching ES and NQ being the core of the service. But to me, it looks constructive. And as Craig said, I mean, you've got this ongoing currency debasement story. The run it hot syndrome. They just can't help themselves. What are they going to pull out next? I mean, we're going to have data like maybe at some point here in the near future, which we hadn't. Like it sounds like the data that we missed might have been pretty bad. And so, what's the dollar going to look like coming out of that? The dollar also being the fact that equities were down. Craig, you run with this, but the fact that equities and dollar were down at the same time to me just looks like, and again, a complete macro moron, but to me, it looks like, the rest of the world may be peeling a little bit off on U.S. equities. Where are they going to put that money? Gold seems like a decent spot to put it, I guess, for me. But that's what I look at when I see the dollar get smoked along with equities, especially following a dollar rally where equities were sold into it. So I am pretty constructive on gold. So we'll see if it can put in a base above these 4110s maybe.
Yeah. No, that's what had me, part of what had me concerned last week, at least the tail end of the week, was you had equities down, you had dollar down, you had bonds down, crypto down, right? It was not really, it wasn't fun. It wasn't, easy to find places to hide. Just a look here at 40 minutes into the session, NASDAQ's up 75 handles, S&P 67. My kids would laugh at that. up 11 handles. Russell's up 15 basis points.
I see what you did there.
Yeah, you like that, right? Bitcoin kind of recovering a little bit, but still largely weak. And the dollar's mixed, right? Touch stronger against the yen. Yeah, basically flat against both, and oil still soft. So I don't know. It's just from a macro perspective for the week, right? It just there's the narratives are shifting on AI. The economy is slowing, and we're going to get more likely to get more proof of that. We're going to hear from the Fed in the Fed minutes about what they were thinking last meeting when they cut and decided to stop quantitative tightening. We'll get some color on that. We're going to get the Nvidia numbers, which, look, I mean, you got to imagine in an expiry week like this, with Nvidia reporting, the options activity that we're going to have on, Wednesday, Thursday, and Friday in single names is going to be, particularly for Nvidia, is going to be, I would say, I would imagine it'll be record, be off the charts here, and just given the composition and given the importance of Nvidia as a percentage of the S&P and Nasdaq, kind of have to watch that, very carefully. We've been selling off, into this print. I imagine the print's going to be great, and the commentary is going to be great. Jensen Huang is a pump master, and so we'll see the reactions, right? We'll see how the market digests whatever Nvidia has to say with respect to the growth profile. Nvidia, the multiple on Nvidia actually isn't as egregious as some of the other AI CapEx related names or unprofitable tech names. Nvidia's earnings growth has been outstanding over the course of the last 2.5+ years and is likely to continue so. But we'll see how the market reacts. I think that's going to be the biggest important factor for the rest of the week and into the rest of the month and year is how does the market digest whatever Nvidia has to say, right? Deli's been talking about this, in the mornings, which is when we have these trends in place, we typically don't see them end before the end of the year, right? And so tech has been outperforming, all year, and we've seen the divergences. We've seen the low-end consumer-related names have been, for sale. We're seeing modest rotations here a little bit, but to believe that we're going to abandon Nvidia, into year-end year after such a strong year, it's hard to believe. I think come January, that's when you'll probably more likely to get some of that selling pressure that comes from folks who didn't want to pay taxes this year. We'll just wait until next year. So, but we'll see. It's obviously the most important data point this week is whatever Nvidia has to say Wednesday after close. So
100%.
Yeah, I mean, honestly, to me, the fact that NQ did take its prior week low, I kind of like that. If I'm bullish, to be honest, it kind of drove me nuts that ES did not. I mean, I want to see those stops taken. And again, like this range has just been, the bid has been absolutely ferocious. So to me, again, if we sustain these singles through tomorrow that we thus far have held the first set and we fire out of Friday's range, again, this is going to be a very tricky spot, especially on NQ. You can see how thin the volume is here from last week in between these two distributions. I mean, it has to get above, call it 500, 502. That was the high basically on Thursday. It's got to clear that, but I mean, it's going to look pretty interesting if this fires out of here. And again, I do like the fact that it took those lows, took those stops. So I've been very cautious on indices, but I also agree that, and I mean, especially if you look at like RSP looks like death, IWM looks like death, obviously Buttcoin looks like death. But the big indices will find a way to get that one last pump. And so like, we'll see if that's Jensen. I mean, it seems like the Trump pump has gone a little bit flaccid. We'll see if, Jensen is losing his vigor as well and he can't get it done. Maybe he does. Then you've got the Fed, ending QT, does that really get things moving? And if not, I mentioned this 2 weeks ago, I think you need to be very, very cautious into January. The market has no excuse to me not to rally both from here and into the year end, given your typical year end dynamics. End to QT. I mean, as long as Jensen doesn't shit the bed this week, what's the excuse? So to me, we could see a nice rally, and I feel like if you don't, it's a problem into next year. So if we can't get these new highs before the end of the year, just does not bode well to me, anyways, into January.
I've been saying this for 2 months. The chart, if you go back to the lows of the year, at 58.38, 58.34 in the S&P and 16.460, I think, in the NASDAQ. If you look at those lows that we set and the rally since then, this chart looks just like 1999. And I still think that the S&P is going to try. I caught 240 points last week, but I still think that we're going to make new highs. I still think that the S&P trades up to 69.80, and the NASDAQ up into the 27,000 handle, at least. And then at the beginning, what we have to pay attention to, and this goes back to dovetails into what Craig was saying earlier, is in the beginning of the year, I think in January, just like in 2000, we have some more volatility, and then we sell off, and that sell off is going to be, it's going to be, you want to be a big league hitter, you got to be able to hit big league pitching, and it'll be big league pitching. It's not going to be a time to be buying dips, or in the meantime, don't be picking tops either. Again, that's a whole nother thing. I mean, I don't understand why people are going to sit there and buy dips. We're as independent traders. Don't dollar cost average anything, and don't average in a loss. I'm better off buying them on the way back up. Friday's low was 66.74, I think, something like that. I have no desire to sit in front of a running freight train and say, this is as low as you're going. I would rather buy them on the way back up. Rather buy them at 66.97 quarter, which is the top of the opening range. Why do I want to stand in front of a running freight train? I want to be here tomorrow. I want to ensure that I will be here tomorrow. And dip buyers always eventually get run over, as do rip sellers. You're better off selling them on the way down. So if they trade up to 69.80 and we take it out and we rally another 300 points up to 73 even, good, fine. If we start breaking, sell them somewhere along the way. Trade the opening range, trade the strat, trade something that gives you pivots and clear entries with super clear stops. Most important thing about trading is know where you're going to get out for an expense or a loss. Know where you're going. Before you take a trade, you got to know where you're wrong. Otherwise, don't trade.
Yeah.
100%.
Yep, I agree completely. And, like I said, with sort of my ramble about, what we've done over the last couple of months, we still haven't even taken out a prior month low. So like, why are we talking about tops? You know what I mean? Like, let's at least show some willingness to take out a prior month's low on the big indices. And we haven't done that yet. So it's almost always barring like an August situation from 2024, where we just liquidated to hell, barring those sort of somewhat unique situations, once you pause an uptrend properly, a high time frame uptrend, take out a prior week, take out a prior month, what have you, there's almost always a back test higher. These are very resilient indices. It is very difficult to break down a bull trend. So as Pax is saying, there's just no reason to be first in. There's almost always going to be at least a back test higher. Look what we did, November, like if you're thinking this thing tops out, like look what we did November through February of last year. Like it was a very, very clear topping process. But guess what? If you just like swung for the fences short from November, you probably got blown out. We made, a couple of additional higher highs. And that's what these things look like. So especially the big indices. So like the trash, can burn all around, but the big boys are going to find a way to show some strength. They pretty much always do in a bullish year and a bullish trend until that trend has been broken. It is tired. It's not broken. So this is going to be a big, big week, I think, because again, to me, I feel like if we give back Friday, and I talked about, how big those 24 6s, 24 5s were on NQ. I mean, imagine if that flips to resistance. Like it's a shit show for the rest of the year, probably. But as long as that holds, then this can stay strong. And so to me, this is a very, very important week. And these singles in particular, very, very important to defend. And if that remains the case and we initiate above Friday's high, then all of a sudden everybody that was bearish over the weekend is like, oh, what the hell was I thinking? I missed a great long, right? So I think neutral is the way to go from here. Let's watch this first move. Cash hours means more than anything to me. I never would have thought that we would butter through these singles overnight in the first move. But let's see what Monday brings. And I do think the reactions, if we push back lower, it's going to be important. And again, this sort of in-between battle zone, I would say, for NQ, because this has been all about NQ lately. If this market is strong it will trend right through this lower volume area for the most part,
What prices are
and
those?
find its way. What's that?
What price levels are those?
So we've got basically, you've got Friday's high at 293. Okay.
Mhm.
And then I'm going to call it Thursday's high, which I want to say was like 502 exactly. That was the day where the high was like the opening range. So if you say 293 to 502, this should be a battleground, and you should say some two-way action where sellers try to defend pops in here. But to me, I'm broadly going to be short if buyers cannot sustain above Friday's high, and I'm broadly going to be long
Right.
if buyers are sustaining above Thursday's high.
Yes,
In between
yes.
here, pick them. It's going to be very two-way. We'll see, right? Like, I mean, again, if bulls are strong and they have some mean intent this week, I think they'll drive through here with no problem. Sellers must defend pops into here and then find a way to reinitiate back below Friday's high if they're going to have any hope of causing any kind of damage this week. So that's your battleground there. And then there's clarity to me, relative clarity below Friday's high, relative clarity above Thursday's high.
You got clarity, you got reason to spend money in the markets. You don't have
That's right.
clarity, like as Pharm was just saying, stay out. There'll be clarity, sit tight and wait for it. Hey, so real quick, what do you think of the Russell?
Yeah,
I'm just kidding. I
Look,
just wanted to hear what you were going to say.
Look, after 2 weeks ago, and the comment about Rosie O'Donnell, she's been all over me. She's been outside my window at night with a boombox on her shoulder, trying to win me over. Certainly a lawsuit pending. I don't know if you missed that 2 weeks ago, guys. I'm sorry you missed a good one, but yeah, we were talking about the Russell, and somehow it involved a picture of Rosie O'Donnell. You just go back and watch it, I guess.
What a boombox, holding up the boombox with that Peter Gabriel song playing.
That's right. That's right. Trying to win
Say
me
anything,
over.
that's it. Yeah. Say anything. That's hysterical. It's hysterical.
The thing to keep in mind about the Russell, it's not your father's Russell
No,
anymore, right? It's a different composition than I think people are used to, right? People think of the Russell as kind of small cap, old industrial bank, regional banks, old economy stocks but really it's morphed into NASDAQ on steroids, right? I mean, the biggest stocks in the Russell 2000 right now are Bloom Energy, IONQ, Okla, Credo, Fabrinet, Nextpower, Kratos, and names that are tied into the AI CapEx boom, tied into quantum computing, tied into crypto mining, right? This has become more of a levered play on unprofitable tech and liquidity than I think people are used to. So when you're rotating, if you're thinking about rotating out of large cap into small cap, it's not a growth to value rotation like maybe people used to think it is. It's actually a growth into unprofitable growth rotation. So it's a different construct, which I think is part of the reason why the chart Russell looks like much worse than the S&P and Nasdaq chart looks lately.
Horrible.
Because many of these names have blown off, right? We've talked about these blow off tops for the last few weeks here. We've seen the rare earth names blow off. We've seen the quantum computing names blow off. The nuclear related energy names have blown off, right? And these are it's going to take time to get capital to rotate back into these unprofitable tech areas here, particularly as liquidity is being drained and crypto's under suicide watch, and the Fed is not ready to provide the next level of liquidity, right? You basically right now have four voting members who are probably not in favor of cutting rates in December, let alone beyond December. Now, clearly, if we get, very adverse payroll prints this week and, of course, when claims start to come back, we start to see that, the Fed will likely move into December. But the idea that the Fed is going to be cutting rates aggressively next year just isn't there right now. And so if we don't have the incremental liquidity coming, seeing capital rotate back into that unprofitable area of the market, I think is unlikely to happen. I think we're more likely to get rotations into things like pharma, where the multiples are much more attractive. Maybe things like energy specifically, if we have power constraints in the AI story, for next year. So Russell is, it's worth all the name calling that I think Pharm and myself like to throw at it.
You said it's not your father's Russell. My first thought was it's my ex-wife's Russell. She can have it. You know, if you want to compare the indices real quick, the S&P is trading at just above the 50-day moving average at 67.42. So the 50-day moving average is 67.42. The Russell, however, is trading below the 100-day moving average. The 100-day moving average, that's how weak it is. So, you know, the 100-day moving average, well, actually it's trading above it now. It's 23,000. I'm 2,369. It's 2,369, and it's gapping above that. So while the S&P and the Nasdaq are both above the 50, excuse me, the 50-day, the Russell is struggling with the 100-day moving average. I mean, it's just so weak, and there's no get up and go. There's no follow through. It's almost untradeable, at least, you know, from a momentum standpoint, or from a swing, from trying to take an opening range trade into a swing trade. You're not going to get many of those. You get some pretty decent intraday trading if you want to trade it that way, but I don't know.
No.
So,
well, coming up on the hour here, 6:55. Let's just take a last look at the tape before we close, and don't forget to like and subscribe to NinjaTrader Live. Really appreciate all the support. But Nasdaq up 94 handles here. S&P's at 67.70, up 15 handles. Dollar's a little bit stronger. Gold up 15 basis points. Oil down 90 basis points. And the bonds, I think the bonds are important. I'll have to keep an eye on bonds all week. A little bit weaker here, and I think that dynamic at Pharm kind of alluded to, where if we're getting equities, dollar, and bond selling, it's a little bit of rotation kind of out of dollar assets. But I'll go around the horn here, a minute for each of you. Sara, last thoughts as we head into the important turn for November.
Well, I don't know about all in November, but I I know right now it's a kind of, we got a bullish setup, and we're trying, as far as I can tell from right now, we're trying to go up to Friday's highs. Yeah, like I said, if I get more of a feeling or bias, not a feeling, but a bias, and things start, doing all the same thing at the same time together, and I have some conviction, I'll tweet about it. But right now, just one day at a time, one candle at a time. I'm not getting too ahead of myself right now, so.
Makes
That's
sense.
it.
Pax, what are you thinking here? Last thoughts here?
above the weekly reopen, above 67.66, we'll target 67.85, and then we're back up until last Wednesday's highs. Nasdaq above above the open 25,160. Sorry, 25,144.46. We target 25,238, and then up to last week's high, last Wednesday's highs, which would be, I'll tell you in a second. That would be a nudge. That would be a lot higher than where we is. Like 25,780-ish. 20. So above 25,238 or 27. Just call it 25,240. Then I'll look for 25,750. We'll call it 25,750. If we start taking out the weekly reopen, then I'd be looking to sell it, and see what the opening range does tomorrow. And I cannot wait for Nvidia's earnings. It's going to be, it'll add some fuel to the fire, and it's going to be fun.
Yeah, it's just one of those, like, because of the composition right now, right? I mean, how big? Let me just pull it up real quick here. But Nvidia is 8% of the S&P, and it is 9.95% of the Qs, right? So, I mean, we've seen. Let me just see here, just the expected moves, but we're talking about hundreds of the expected move of 4 or 5%, whatever it is. Hundreds of billions of dollars of market cap that's going to shift on this print, specifically with millions of calls, millions of puts, and options activity that's going to go into an expiry week. There's going to be there's going to be fireworks around this, and I think it's really going to set the tone for whether or not NASDAQ can, continue and make new highs into the end of the year, or if there's a lump in the lump in the stockings, lumps of coal in the stockings
Mhm.
for the end of the year here. But it's going to be wild, and that's Wednesday after the close, right ahead of the NFP on Thursday morning and expiry on Friday. So plenty to go. Pharm, I'll give you the last word here. How are you thinking about the final setup here?
Yeah, I mean, let's see how cash opens in the morning, right? That's certainly more important. I did add a spot on the Russell for you. To me, outside of Friday's high, if it gets up into this, call it 24.24 to 24.28 range, I might be tempted to sell that with the heat of 10,000 open diaper pails. Craig, you know exactly the heat that comes off those diaper pails, buddy.
I think they call them steamers. I think
That's right. That's right. So lower edge of this trailing week distribution, value area low, sitting in the single prints from whatever the hell day that was. I don't know. I mean, if this spot doesn't stop it, then maybe it's just going to have a slight delay on its course to zero. But I'll always look, which index is weak, which one's strong, right? I want to be bearish down here, but it's really hard coming off range lows on NQ, especially after having taken out the prior week's low. I would look for it to potentially flip to relative strength after it has been relatively weak for some time. And if so, we know what that's likely to do to ES as well, right? So it had been relatively weak. ES tried to bid off the boomer names and shit, and I couldn't do it. Well, now if tech can find a little bit of relative strength out of here, maybe a run up into Nvidia earnings, then we'll see. Again, very, very hard to roll these things over and completely break this trend. It will buck and it will kick until it can't anymore. So I tend to be very, very careful being short anywhere near a range low, and it is a very, very clearly defined range low to me on both NQ and ES. So multiple weeks we've traded down here, and it has just fired out. So that's where I'm at. Let's see how they open tomorrow.
All right. Sounds good. Guys, it was a pleasure hanging with you again this Sunday. Thanks for joining us. Check out Deli and Chai, myself in the morning. This was the Sunday Open. Have a great week, guys.
Bye,
Great.
everybody.
Yeah, great show. Have a wonderful week, everybody. See us on the trail. God bless you all.
Take care.